Thank you, Mr. Chairman. Good morning, Chairman Powell. It's good to see you once again, and thank you very much for coming in today. Before I begin my questions, I wanted to take a moment to underscore the importance of the Insurance Policy Advisory Committee that the Fed is required to establish pursuant to S-2155. As you're aware, South Dakotans have a very strong interest in preserving our state-based insurance regulatory system. I look forward to working with you and the new committee to find ways that we can promote the interests of our state-based system. So appreciate that. I've got a series of questions that I think I'm just going to put them in as questions for the record and ask you to respond later on. Very seldom do we get an opportunity to have the chairman of the Fed come in front of literally the country and to share his thoughts about the direction of our country, in many cases, the financial systems that we have here and so forth. And I got to thinking this is probably an opportunity that we shouldn't let go by to talk about the impact of the federal government and its spending with regard to monetary policy as well. And in particular, it seems that Congress has a tendency to only make changes in the way it does business when there is a crisis at hand. And I'd like to give you an opportunity to perhaps visit with us and offer, if not direction, at least an observation as to what happens when Congress fails to take care of some of the safety net programs that we have in this country. And I'm going to begin by simply recognizing that we have $22 trillion in debt. And clearly that debt is being financed. That means there's competition for those dollars. The Federal Reserve, on the other hand, it actually manages through regular meetings and discussions, and the quantitative easing is an example of one where you as an organization have very carefully selected how you will work that through, how you will refinance and so forth, but you manage it on a regular basis. Congress has a tendency with its budget and the money that it spends to not even look at a number of the expenditures. Today with our budget, we have about 31% of the budget that we actually vote on. We vote on defense and non-defense discretionary spending. We don't vote on, and nor do we appear to manage Social Security, Medicare, Medicaid, or interest on the debt. About 70, well, close to 70% of all of that which we spend every single year. Every single year, for as far as we can see, we're going to run significant deficits. Would you care to comment on the way that Congress manages or does not manage the safety nets, Social Security, Medicare and Medicaid, and what the impact that has on our economy as a nation?
I should start by saying that we try to stay in our lane, which is monetary policy, bank regulation, financial stability, and not, we have no supervisory role or really role as a commentator. We don't score bills. There's JCT, there's CBO, there's OMB, and we don't do those jobs. But I will say that, and as I said in my statement, that the U.S. federal government is on an unsustainable fiscal path, by which is meant that that debt as a percentage of GDP is growing, and now growing sharply, growing quickly, faster, and that is unsustainable by definition. We need to stabilize debt to GDP. The timing of doing that, the ways of doing it, through revenue, through spending, all of those things are not for the Fed to decide.
But as perhaps, for lack of a better term, one of the chief economists in the nation, to be able to give advice to the folks that are out there, to the country as a whole, about the things that we have in our future and about the threats to our future, Social Security will go bankrupt unless we start managing it. Is that a fair statement? Well, on the current trajectory?
I think, if I could say it this way, I think what happens over time is that we wind up spending more and more of our precious revenues to service the debt, to pay interest to people who own the debt, as opposed to investing in the things that we really need, education, all the things that we need to be investing in so that we can compete in the global economy. I think if I had, on the spending side, the thing in my personal thinking, again, this is not the Fed's role, but and I think in many people's thinking, the thing that drives our fiscal unsustainability, the single biggest thing, is just healthcare delivery. We deliver healthcare outcomes that are pretty average for a well-off country, but we spend 17% of GDP doing it. Everyone else spends, on average, 10% of GDP. That's $1 trillion plus, way more than $1 trillion every year that we spend in delivering healthcare. So if I were in your seats, and I'm not, then I think that's a good place to look. It's not that benefits themselves are too generous. It's that we deliver them in highly inefficient ways, particularly healthcare.
If I could, and I know I'm out of time, but I'll just say, in other words, what you're saying is if we actually managed the resources that we had, we could probably do a better job than what we do today, where we just simply don't even include it in our regular budget that we vote on a year-to-year basis.
Again, I'm not here to criticize Congress, but I do think it's a profitable thing to do.
Thank you.